Hello, my name is Steve Bigelow with the Candlestick Forum. We did see some reversal signals in the markets. However, they were not full-powered reversal signals. We saw a evening star signal occurring in the Dow. We already knew that it was in a wedge formation, which told us until they broke out the Dow through this top part of the resistance level of the wedge, we were still probably in a sideways mode. So the fact that we saw the selling today told us that this market's really kind of sideways. After the NASDAQ came right up to the first target after our J-hook plus pattern that told us from the 50, the next target was likely the 200. Well, now that we were in the overbought area, we wanted to be a little bit more, receptive or expective of a reversal signal. Now, this is not a reversal signal. This is just a big down day. However, it does have implications. If you're up here in the overbought area and they have enough strength to gap it back down through the previous day's open, that's telling you the bears are taking control. May not be a full-scale reversal, but there's probably going to be some selling, especially right here at this resistance level that also coincided with the 200-day moving average. This allows you as a trader or even a long-term investor to make decisions of what to do with your portfolio. If you're trading stock, you might close out positions that are showing a little bit of weakness. If you're a long-term hold of a position, you might think about, well, let's start adding some, writing some calls against our position. Same scenario over here on the S&P 500. Notice how up in the overbought area, after they gapped up through, I think there was a resistance level they came up through. When they gapped down below the open of Friday, that was a strong indication that the bears were starting to take control. Again, not necessarily a full-scale reversal, but in this case, that's strong selling. So when they close just above the T-line, we now have a trading strategy. If they open this lower, more than likely they're going to come back down to the moving averages, because remember, when they go up through a resistance level, they'll come back and test it to see if it's going to act as support. Now, candlestick reversal signals still put you in a position where you're in the right place at the right time. Carvana was up strong today after a bullish engulfing signal, after supporting here at the 50. This was a strong implication that no matter what the market was doing, they were buying Carvana. Where was the next likely target? I think the 200-day moving average is up way up in the $15 to $20 range. Does it mean it will get there? Not necessarily, but it does indicate that we're probably in an uptrend until we see a sell signal. So anytime you can identify a strong candlestick signal, whoops, that's supposed to be a bobble breakout, not a hobble breakout. But notice the best friend signal, your doji gap up, which is a strong signal in itself. Number two, when it came up through the 200, that was a bobble breakout, a J-hook pattern with accentuation on the fact that everybody and their brother was waiting to see what they were going to do at the 200. And so the strength of candlestick signals and patterns, again, followed by a doji sandwich, even on a big down day in the market, there's still buying going on in this entity because of the strength of these reversal signals. So anytime we see that high probability reversal, in this case, it was a bullish flutter kicker signal right off the 50, giving you a J-hook plus, that's usually going to be followed through with more strength, again, in spite of what the overall market trend is doing. So anytime we can see a pattern and we can see where the breakout level is, look at your bullish engulfing right here at the 200, reported earnings. This is what we train people in the Candlestick Forum chat rooms every day. What do you do with this price move if you are long or if you are thinking of going long? We can use the doji rule. A positive open would tell us there'd be more positive trading. This is why knowing what the results of candlestick signals and patterns allow you to be in positions where the probabilities of making money are greatly in your favor. You're not just kind of flipping in the wind, trying to see what might be the next move. Using candlestick signals and patterns give you a high probability expected result based upon how they would open this one tomorrow. Or a reversal signal as we saw in Netflix. Not quite a reversal signal, not quite a reversal signal. But now you've got a bearish doji sandwich, which also gives you a good trading platform, meaning if you were long, to stay long, it has to open positive and trade positive. If it opens lower, the bearish doji sandwich tells you they're coming back to some area. You want to close out a long position. And the stronger the signal, a bearish kicker signal, it's going to give you strong downside momentum. And if it happens to be correlated with the market kind of turning down, it puts you again in the right place at the right time. We did that with Sava. There was your bearish kicker signal. It never got back up above the 200, let alone the T-line. Just, again, puts you in the right place at the right time, telling you the bears are definitely in control. So what a reversal signal does for you, the 12 major signals, is it alerts you to when it's time to be ready to take some profits. So as we saw in Tesla, even though it broke out of this fry pan bottom, today's bearish harami would indicate that if they open this lower tomorrow, which would also probably be a function of the market's opening lower tomorrow, you probably want to take profits because they're probably coming back to this level. So our candlestick training that goes on every single day in our chat rooms and then Monday nights and Thursday nights kind of indicates much more clearly what's happening in investor sentiment. If they failed at the 200 twice, once with a shooting star, once with almost a dark cloud, stochastics rolling over, that pretty gives you a good high probability setup that if this starts trading lower, especially below the T-line, that's a good indication. These signals have told you they failed here at the 200. It's time to get out there, but likely coming back to the 50 and then see what it does from there. So again, this is not rocket science. This is just logic. So join us for a 2-week free trial. It doesn't cost you anything if it's a free trial, but you get a lot of information that is much more insightful as what happens with price moves when you're using candlestick signals and patterns than listening to gurus or analysts or brokerage firms telling you what could happen in a stock. That'll be it. We'll see you in the chat rooms.